Yo, let's talk about some big moves in the financial world that could change the game for a lot of us. Federal Reserve Chair Jerome Powell just dropped a major hint that the Fed is about to start cutting those sky high interest rates. And trust me, this is the kind of news that can hit your wallet in a big way. Now, the good thing about me, I purchased my home in 2021 and I secured a 3.2% interest rate. But after that, interest rates went sky high, and I'm glad I bought when I bought. So here's what went down. Powell was speaking at the Fed's annual symposium in Jackson Hole, Wyoming, and he straight up said, the time has come for policy to adjust. Translation, the Fed is looking to start cutting interest rates soon, probably as early as September. Now, he didn't give us exact numbers, but most experts think we're talking about a quarter-point drop. Why is this happening? Well, inflation has been a beast for a minute, but it's finally starting to chill. Meanwhile, the job market isn't looking as strong as it used to. Powell mentioned that while inflation risks are down, the risks to employment are up. That means the Fed's got to switch gears to keep the economy from spiraling into a recession. Now, here's where it gets interesting. The Fed's key interest rate is sitting at the 23-year high between 5.25% and 5.5%. They've been keeping it high to fight off inflation. But now that inflation is dropping closer to their 2% goal, it's time to ease up. The last time they looked at inflation, it was at 2.5%, way down from its peak of 5.6% last year. Meanwhile, the job market, which was on fire post-COVID, is cooling off. July's job growth was weak, only 114,000 jobs added, way below the 175,000 expected. Plus, the unemployment rate ticked up to 4.3%, the highest since October of 2021. All of this led to some panic in the stock market, with folks thinking we might be headed for another recession. But here's the kicker. Powell says the Fed might start with small rate cuts, but if the job market keeps getting weaker, they could drop rates by a half percentage point. And that's a big deal. Lower interest rates mean cheaper loans, whether you're looking at mortgages, credit cards, or business loans. But on the flip side, it also means lower returns on your savings accounts. So, what's the big takeaway here? Powell and the Fed are trying to navigate a soft landing for the economy. That means bringing down inflation without crashing the job market or sending us into a full-blown recession. It's a delicate balance, but Powell seems confident that they're on the right track. Who knows? This whole situation started with the pandemic, when factories shut down and everyone was buying up goods like crazy. Inflation went through the roof. Add in the chaos from Russia's invasion of Ukraine, and prices just kept climbing. But now, with things stabilizing, the Fed's got to play their cards right to keep the economy rolling without hitting any major bumps. So keep your eyes peeled, because the next few months are going to be crucial. If the Fed starts cutting rates, it's going to have a ripple effect on everything from your loan payments to your investments. So stay tuned, because this is one story that's far from over. For more news and insight, subscribe to Millions Made. Peace.